We talk about how this is a slow start to a big week, but are we overstating how big of a deal this week is?
We can never overstate it.
Well, from an investor's
financial news media, it's a huge week.
It's potentially historic. I don't think the markets are really counting on a great deal to come out of this one short meeting, but certainly the possibility of something dramatic happening is there.
Okay, well, what about when it comes to the central bank meetings, the Federal Reserve, the ECB? Julia mentioned Brexit talks, and of course, we're also keeping an eye on any kind of trade developments.
I think the central banks have pretty much telegraphed what they're going to do, so I wouldn't expect really a tremendous amount of drama this week. The issue with the central bank is what happens a year from now.
Yeah.
And do they eventually go too far, as they almost always do?
There's obviously a lot coming in the next several days. But before we talk further into that, I'm going to ask, why do you think markets didn't care at all about what a mess the G7 turned out to be? Because you'd think that it would have implications for NAFTA, which is a real economic story. The fact that relations between the U.S. and Canada seem to be so bad, Canadian dollar getting hit, but risk assets didn't seem to bat an eye.
Well, there's a lot of name calling, and after all, we have a huge, it's our biggest trading partner by far,
yeah.
And it's roughly in balance, which is another thing. Well, I'm not sure why all the name calling, given that we have roughly, including trades and services, about in balance. But I think markets have seen this before, where there's some drama, but it doesn't necessarily have an economic impact at the end of the day.
Or they assume it won't. They've kind of got used to looking through headline risk where the president's concerned.
Well, I think it's right. So if we do have a trade war, in other words, this goes into real economic activity as opposed to just name calling, then obviously markets will react in a negative way.
So you've done research on what typically causes bear markets. You have this great acronym for it, RSVP, recessions, shocks, valuation, and policy mistakes. Which ones can we write off there?
Well, valuations have come down this year. So stock prices are up about 5%, but we're going to get about a 20% jump in earnings this year. So actually, you're getting a little bit better value than you started. So that's gone down in our worries. Shocks, it seems like there's a lot of potential shocks out there, and many of them, but by definition, you can't predict that, so that's why they call them shocks. So the two big issues are, when are we going to go into the next recession, and what policy are we going to have along the way? I think a recession is still at least a year out. And on the policy front, it looks like in the short run, we know exactly what the Fed is going to do. And it's just a question of, do they get to the point where it's too much in 2019 or 2020 or later?